Today we're zeroing in on the forces reshaping the cyber insurance market, from a potential ban on ransomware payments and evolving regulations to shifting capacity and emerging threats. We will explore how these changes are impacting coverage, underwriting, and the opportunities ahead for brokers and clients. Joining me is Gülsah Dagdelen, Cyber Manager for EMEA and Latin America at Tokio Marine. Vanessa Leemans, Head of Cyber UK and Lloyd's AXA XL, and Sam Cheshire, Head of Cyber UK and Ireland, Gallagher. Welcome, everybody. So how do you anticipate a potential ban on ransomware payments if implemented in the UK or elsewhere? Would this affect the demand for cyber insurance and the type of coverage clients seek?
Thank you, Chris, for asking this question. So this is actually a very interesting and challenging debate, which has been ongoing for many, many years since cyber arrived in continental Europe or EMEA. So we still see a huge amount of cyber claims arising from ransomware. And to be honest, we have never, and regardless of soft or hard market, we were never concerned about the ransom payment itself. We have always, as Tokio Marine HCC, focused on the technical assessment of each risk and how companies can actually become more resilient and limit their exposure. That goes in hand with as I said, the risk assessment, focusing on the resilience of the company, on redundancies, on recovery of systems, etc. Our experience is that the ransom itself is not a big deal for companies, or it should not be a big deal. The costs related to recovery of systems is the main problem for companies, mostly. And what we also see is a link between the amount of ransom demand and how resilient the companies are. So if the company has proper backups and is able to recover the systems in short time, the ransom demand is usually not as high as for a company that is having encrypted backups and not being able to recover the systems so fast. So instead of focusing so much on such on the question if ransom itself could be banned or not, we prefer to focus really on the resilience and the technical maturity of the company. In claim scenarios, of course, there is always the question, can the company finally afford not to pay a ransom? So this is very important to mention, because there are publications that say, especially in the SME sector, a company in average could survive maximum 6 months, and then it could end up being bankrupt. And then the question is, what is at the end, what is the bigger loss for the economy and for those clients? We as insurers, of course, never recommend to pay ransom. But these are all considerations that should be taken these are all things that should be taken into consideration when discussing if ransom payments should be banned or not. Even though they are not banned, it's always not clear if they are actually insurable. So from a cyber insurer perspective, I would say it is less relevant for us.
And I would also like to stress that ransomware payments is indeed not the biggest claim expense to insurers, but a ban could encourage organizations do what they should be doing already, getting the right coverage, planning for preparation, prevention, and recovery. And actually, AXA XL recently published a global cyber claims report, which highlights that non-ransomware claims are significant. And our report actually finds that the top 3 triggered coverages are, first of all, data breach, response and crisis management. Secondly, business interruption. And thirdly, privacy and cybersecurity coverage. And only in fourth place, the ransomware and extortion coverage would be the fourth largest portion of a claim coverage figure. So I think that's important to highlight. So we really much look at how to prepare, prevent, and recover. That's obviously still the best option. So a ban may encourage organizations to do what they should be doing already. Yeah. So it's very much at preparation and protecting effectively, rather than relying on the last resort of ransom payments. And I think it's also important to highlight that ultimately the bigger goal is very much over the longer term. I would hope that a ban would deter and discourage ransomware attacks in the UK.
I think it's safe to say we all agree that it's probably unlikely to impact the demand for cyber insurance because the claims are highly unlikely to just go away overnight. We've already seen in the UK that it's not illegal, but there is a ban on public sector entities from paying ransom demands. However, we haven't seen it as an absolute stop that the threat actor groups are still making those ransom demands against public sector companies. They're just choosing not to pay them now, whereas historically they may or may not have the option. But the thing for me that's really interesting is how is this actually going to be policed? If there is a ban on making ransom payments, how do we know whether that's actually happening and whether people are doing it or not? Are we going to be fining companies that have gone through a very large cyber incident, felt that their only route to save themselves is to pay a significant sum to a criminal activity group, and then what we're going to fine them? Kick a man whilst he's down. It seems like a very odd thing to do. So whilst this is potentially a thing that we're going to be having to look at in the future, and I'm very eager to understand how the policing of that looks, because if it is fines, a lot of our clients may not be able to pay the fine. How else do we stop it?
Thank you. Yeah, very interesting point. But what steps should insurers and brokers take to help policyholders better prepare for the possibility of a ransomware payment ban, both in terms of risk management and incident response?
I think there it's really important to build a dialogue between insurer and clients so that the new legislation is a transition, not a shock. And there it seems very, very, very obvious, but effective cybersecurity comes down to the relationship, the collaboration between client, broker, and insurer, and that exchange of information. And not all cybersecurity providers are created equal. So I think it's important to really rely on expertise, and that's where AXA XL can help prepare and protect clients against that cyber risks.
I think the good brokers are already doing this. The good brokers are already not just talking to their clients about cyber insurance. Cyber insurance is one cog in a very large wheel. Most of our clients are actually aware that they need to be doing more from a cyber risk perspective, coming up with a cyber incident response plan, practicing it, making sure it works. And if the good brokers are helping their clients with that, they're more prepared for this ransomware ban than they actually think they are. We've seen across our book recently that we are seeing fewer of our clients actually pay the ransom, mostly because they've got a plan. They've been there before, they've tested it, and they know what they need to do in order to prevent that from happening. We're also seeing a lot of our clients that have previously had to pay a claim due to the data being exfiltrated from their system, implementing tools like data loss prevention, which is making sure that part of the ransom demand is actually entirely irrelevant to them. So we are definitely seeing our clients be better prepared than they ever have for a ransomware incident. And if this ban does come into place, our clients, we hope, will be in a good position to answer it without having to pay the ransom demand.
What new or emerging cyber threats are having the greatest impact on underwriting decisions and claim trends in the market this year?
I think we're seeing an increase in supply chain attacks, impacting multiple organizations and amplifying the claim sizes. The threats are particularly concerning because they can compromise multiple entities simultaneously and are really harder to detect and defend against. So that's where cyber criminals are very much exploiting those weaker links to gain access to larger organizations. Obviously we mentioned ransomware attacks already. That continues to be a top concern due to increased sophistication and impact. the threat actors are employing advanced techniques, targeting critical infrastructure and demanding higher ransoms, often causing that significant operational disruptions and financial losses. And then AI-generated attacks and the automation, as the rise in AI technology has enabled threat actors to automate and scale attacks, including creating highly convincing phishing emails, deepfake scams, and automated malware. The increase in the volume and sophistication of the threats makes the defenses more challenging. And then business email compromise and social engineering also continues to be a primary cause of claims. And AI as well is making the business email compromise and social engineering attacks more convincing and targeted. And these attacks exploit human vulnerabilities, often leading to financial losses, data breaches, and loss of sensitive information, and often with minimal initial technical breach signs. So I think that those are 4 key threats we're seeing.
I think the key word there, Vanessa, is sophistication. I think everything that we're seeing this year, we've normally seen before, but it's just that level of sophistication from the threat actor groups that's much higher than ever before. It's taking things that have potentially worked on a few people and really honing those skills, whether it's social engineering or using those social engineering ploys to exploit vulnerabilities. We're really seeing that increase in the level of sophistication this year. There's been the big sort of, whilst there's not many new attacks, it's just the threat actors doing what they do, but better.
And it has been mentioned already several times, but what we also see is, of course, the artificial intelligence. I mean, artificial intelligence is being used by hackers, of course, also by companies to protect against those attacks. The question is always, companies are regulated, hackers not, and that is always something to keep in mind, that the question is, who's always 1 foot ahead?
How are recent or upcoming changes in UK or EU data protection or cyber regulations influencing policy wording, coverage limits, or client risk assessments?
Regulatory developments in the UK and the EU are shaping the way businesses approach cyber risk management. So we're seeing an enhanced focus on compliance and accountability. So the regulatory frameworks like UK GDPR or the NIS2 directive and the upcoming UK Cybersecurity and Resilience Bill are emphasizing stricter data protection and cybersecurity requirements, which prompt businesses to prioritize compliance as a core element of their risk management strategy. These regulations also mandate timely breach notification and transparency, which incentivize companies to develop robust detection, response, and reporting protocols. And so with these regulations, we really see a shift towards more of a risk-based and preventive measures. So we're moving away from purely reactionary measures towards encouraging proactive risk assessments, routine vulnerability testing, and adoption of best practices like zero trust architecture. So that's very much that promotion of a culture of resilience rather than compliance. And then maybe also want to highlight that we're seeing an increased demand for expertise and external support. As the regulations become more complex, the businesses are looking for more external expertise, such as cyber risk consulting and specialized insurance solutions. Yeah, so that's again where we are there as experts to help businesses prepare, prevent, and protect, and ultimately prevail. I think it's a key message.
I would like to distinguish here a bit between the client's perspective and the insurers or the insurance market's perspective. I mean, from a client's perspective, a new regulation can always suppose a burden to companies, especially smaller ones. The cyber frameworks have to be implemented. They have to comply with all the new regulations. They have to implement a new risk assessment, etc. But it is also very helpful because it gives the companies a certain guidance, let's say, on the minimum requirements that protect these companies against future cyber losses. And from an insurance perspective, I can say that, of course, our risk assessments are based on different frameworks, such as ISO, NIST, etc., and different ones. And when you compare these frameworks with all the new regulations, you see that there is a huge overlap between the requirements of these regulations and the frameworks. So from our perspective, it's actually very positive also for the client on the long term when we see that these clients comply with NIS2, DORA, or AI Act, or whatever, because we know that these companies become more resilient to future cyber attacks. And the question of these ransom payments might become a bit less relevant for the future because the companies focus more also on recovery and resilience of their systems. So understanding the fact that for clients it might seem as a huge burden to comply with these regulations, on a midterm, we are convinced that this will help the cyber product to evolve and continue offering proper solutions.
Have you observed any shifts in market capacity, premium rates, or appetite for certain sectors within cyber insurance over the past 12 months? And what are the main drivers behind these trends?
We've definitely seen a lot of change in the market over the last 12 months. We went through that period of real hardening through 2021, 22, and the beginning of 23, and we've come out of the other side of that now. And I feel like we're in a position where the market's softening. But really what we're seeing is that insurers have got a much better understanding of what a good cyber risk looks like and are asking the right questions, which then means that our clients that are investing into the correct lines of security are being better rewarded for the good work that they've done. What we're really seeing is our clients that are protecting themselves properly and investing into cyber risk management are actually seeing the largest benefits. And there's really now, in the IT world, it's difficult to provide an IT director with a bit of return on investment, where normally they'll go to whoever holds the purse strings and ask for something. And they say, well, why would we invest into this instead of something over here that could help us produce more goods or be more efficient in work? And now if we can say, actually, if you do invest into this, your cyber insurance premium is going to reduce, that really helps the conversation. We've really started to see our clients that are doing that properly get that ROI.
I agree. And I would like to distinguish here again between this SME market and the large corporate business, because there is still a difference, I would say. For the large corporate business, I fully agree. For the SME sector, I would say the market is still a bit more stable, although we have new players, especially the new MGAs entering, especially the SME market. We see that the market is still being less affected of the soft market than the hard market, than the large corporates, sorry. And we see change in underwriting philosophy. So especially in the SME sector, we see these scanning tools, outside-in scans, which lead to reduced questions in the proposal forms. Well, we can discuss if this is always risk adequate then in the assessment or not, but that's another topic. But especially in the large corporate segment, we see huge premium discounts, also new players entering, huge capacities, huge limits being available in the market again. And the risk assessment is still being conducted quite properly, especially in the large corporate segment, still conducting using risk dialogues with security teams, etc., etc. So yes, we see a shift, especially in the terms and conditions, wordings becoming broader, and that is per se not an issue. It becomes an issue when we start offering extensive coverage without underwriting it. So there is a little trend that we offer, or we see new coverages in the cyber policies. But when we ask questions around it, we don't really get any answers from the client. And that is making things a bit more tricky or more complicated because, as I said before, cyber is especially a risk that should be underwritten, and that also, of course, applies to new extensions that a cyber policy could enhance.
Well, indeed, I agree that the cyber insurance rates continue to be competitive for the large corporates. Now on SME and that small and medium-sized business, there's definitely a protection gap, as a lot of SMEs don't buy cyber insurance yet. they're also still on a journey of getting to cybersecurity maturity. So that's a real gap in protection. So we need to develop more of that SME cyber market.
Thank you. A really fascinating panel, and a huge thank you to our panelists. And thank you for watching Insurance Business TV.